Be Wealthy and Smart, episode 1278.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about, is a stock market breakout ahead? Because I've been talking for several months now, since my buy signal in October, about a year-end rally, and boy have we seen a year-end rally. Do you realize that the S&P 500 is up 8.5% in November alone? That's usually the kind of return the S&P does for an entire year, and it's done it in just November. And we're not even finished with the month yet. In addition, NASDAQ has been up 11% in November. Same situation, that's a good annual return, but a spectacular monthly return. And it's making my October 11th buy signal look pretty good right now. But it gets even better, because when you look at the chart formation on the S&P 500, it's formed a nice cup and handle. Now, a cup and handle chart pattern is basically what a cup looks like. So it has a left side and a bottom and a right side, and then it's come down from the right side, and that forms the handle. And usually that kind of a formation tells us that the market is about to go higher. This can happen for individual stocks. It can happen for the S&P 500 or other indexes. It's something that I teach in the VIP experience, how to read that chart pattern in particular. It's an important one, and the S&P 500 is showing the classic cup and handle pattern, which means we are expecting stocks to move higher, just as I've been talking about through the end of the year. Now, what's going to cause it to move higher? Well, multiple things. First of all, insiders are buying their stock back. So large corporations have set aside funds and they're buying their stock because they see it as a bargain right now. We have the year-end window dressing, where the professional managers want to look like they own the Magnificent Seven and all successful stocks. So they go in and they buy at the end of the year. So when their holdings are published and that snapshot is taken and shown to their investors, it looks like they've had a brilliant portfolio because they have all the winners. We also have a lot of short covering that's happening. The investors who have been short all year, expecting the market to drop, have been wrong. And they have to go back in and cover their short positions, which is going to also cause a lot more buying. And finally, the people who realize that interest rates have peaked, they're not going to be raised again, and they're going to start trending down even more, are going to be very pleasantly surprised when inflation numbers come in below expectations. Inflation is supposed to drop like a rock, according to the Fed president in Chicago. And we're expecting to see much lower inflation ahead, which will be great news for investors and will cause the market to take off on the upside. Interest rates will naturally fall, and money will move out of bond funds back into the stock market. In addition to that, housing prices are up again for the 7th straight month in September, with Detroit being the big winner in housing price appreciation this year. Now, we still have the Magnificent Seven who are leading the way in this bull market, and that's because of artificial intelligence being the dominant theme right now, in which the market is looking ahead and seeing that profits will likely rise as these large companies put AI strategies into place. This is going to be the overwhelming theme for the decade, in my opinion. Just like the internet and dot-coms were the main theme in the technology boom of the 90s. We also have Chinese company Shein, which is a clothing manufacturer, talking about an IPO. So the IPO market is ready to open up again with this particular launch. And I think many more will follow if this goes off successfully. So we have a lot of good news out there. All of this has impacted the consumer positively as sales for Black Friday were up and consumer confidence has risen nicely as well. More confidence by the consumer means more spending, and they are responsible for about 70% of the economy. So anytime the consumer is feeling better and spending more, that's a positive thing. An increase in consumer confidence shows that a recession is less and less likely. Although we've been hearing about it for years, the signs of a recession are just not there. I'm not seeing a recession in our near future, and I'm still saying the stock market looks like it's going to perform strongly through the end of the year and into the first half of next year. The market is very strong. Don't let that scare you. It's just the way it's going to be during this incredible time when all of these factors are coming together to boost this very strong bull market. And we're here to be invested and enjoy it. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.